Good evening, dear community, and very welcome to our third roundtable with AVCO. Today on the topic of tokenization as a game changer in financing startups and SMEs. Again, we have really distinguished round of discutants and speakers with us. Rudolf, congratulations for this achievement. I must admit it wasn't easy to get them all into this discussion. I'm very, very happy to discuss this topic with them. AVCO is organizing the annual conference on the 8th of October, and towards on the road to this conference, we're organizing together 3 roundtables, these being the third one. Tokenization is a game changer. I'm excited that you chose this topic because I thought tokenization could be a competitor to venture capital, to private equity capital, but you're open for it, you're open to cooperation. So maybe before I introduce our panel, why this topic, maybe you can just frame it for us.
Well, I mean, I think we have to be on the forefront of technological developments. That's what we're doing in our industry. So tokenization is a development that has been embraced by a lot of people already in terms of financing and also payment for payment purposes, but also the underlying technology, the blockchain is of course all over as well already in many of our investments, a key feature. So we need to address it. We want to address it. And it is complementary to financings that the funds are doing, but to some extent also in competition, of course. But we can talk about it, how we stake up in the competition.
Just one question to the yearly summit. Everything ready for it? All the speakers confirmed?
Yeah, I mean the annual conference of the AVCO is in fact completely ready. We have 53 speakers. All the panels are full. We could go tomorrow, but of course we have still a week. It's going to be a very exciting conference, a full day, starting with the Austrian Chancellor. Then Minister Gebesseler is also a keynote. Andreas Dreichel. We have a lot of good speakers and a lot of good panelists. So please tune in October the 8th, starting at 5 to 9, 8:55, going all the way to 5:30 in the afternoon.
Fully virtual, so you can achieve it and reach it from all over the world.
Fully virtual and fully in English.
Perfect. One of your main partners and our sponsor for tonight's discussion is CMS, one very, very distinguished law firm, which also focuses, so to say, on the tokenization. I'd like to welcome Klaus Pateta from CMS. Klaus, thank you for partnering with us and good evening.
Thanks, Sam. Good afternoon.
Then we have with us Bernhard Blacher. He's a member of DAAA, Digital Asset Association of Austria, and co-founder or involved in Cryptics AG. Bernhard, servus.
Servus, good evening.
With us also Valerie Halter from Curio Invest. Valerie, hello.
Hi, good evening. Thank you for having me.
Then Christoph Kanneberger from Apex Ventures. Hello, Christoph.
Hello, good evening.
And last but not least, Shermin Waschengier, author, expert for tokenization, founder of Blockchain Hub, and very distinguished keynote speaker and expert on the global scale in the field of blockchain and tokenization. Shermin, welcome.
Hi.
So we have a very, very broad, so to say, view and field of expertise when it comes to tokenization. I'd like to start with discussing how do you see this tokenization? What do you think of it from legal perspective, from economic perspective, from technological perspective? Let's start with a question, maybe Bernhard, with you. How do you explain tokenization, so to say, from the tech perspective? What does it lie behind?
Well, I think to understand what tokenization of anything, and doesn't really matter in that regard if it shares assets or anything else, means it is important to talk about representation of values. And the proof of you being an owner of cash, for example, is you having it. Just you holding it in your hands makes you the owner of cash. But there are also more complex scenarios, like say a house. And just because you have the keys to a house or you are in it currently, does not mean you're its owner. And transferring ownership of such a house or shares or other assets for that matter is actually quite a complex process. And beyond other benefits, of course, tokenization makes this process much easier. And from a technical perspective, there is actually not a lot to do here. In fact, a tokenized asset on the blockchain will look rather similar to any other cryptocurrency on the blockchain right now. And the heavy lifting in that regard is mainly actually done by regulations and the contracts around it. Of course, that is a bit of a simplification. But the point here is that the proven technology, blockchain, can be used to make the burden of handling such assets, independent of what kind of asset it is, cheaper and much faster. And compared to the benefits this can bring to society and asset markets and innovation this will bring, as a tech guy myself, I actually have to admit that the technical innovation required for this change is rather underwhelming, actually.
Shermin, you wrote a book about it. You have a lot of keynotes about it. How do you perceive tokenization? Often you're speaking from really revolutionary power of tokens, of, so to say, something that will disrupt the internet field. How do you perceive it from the economic and maybe also political point of view?
Mm-hmm. So I think we are only seeing the beginning of tokenization. And from what I understand, we will be focusing today is on a specific type of tokens, which are asset tokens, tokens that represent goods or services or access rights we already know today. And I think these asset tokens, security tokens, depending on regulation, or asset tokens, are the gateway drug to a more expanded and enhanced token economy, where we can tokenize any type of value creation that might not even today have a monetary representation, like, for example, the tokenization of CO2 emission reduction, as we have been conceptualizing with the city of Vienna, or the tokenization of social media contributions, as, for example, many blockchain-based social media networks, such as Steemit, etc., are doing, where you're rewarded for contributions to the network. To sum it up, I think asset tokens, which I think we will be focusing on today, are the gateway drug to to even more value creation and digital representation of socioeconomic interactions.
Are we talking about as well about making, so to say, real assets acceptable, so to say, liquid for small investors who, for the first time in their life, might be able to invest in some objects and some assets that they would not have been able to do in the world so far?
Yes, so I think that what very often blockchain is used as a representative term for the Web3. And blockchain networks are the kind of backbone of this new internet that is collectively managed by either a public or a federated network, and where we collectively manage assets and access rights. And we can imagine, and this new internet kind of allows us to create and manage these kind of assets and access rights and incentive tokens with a few lines of code on a public infrastructure. And we can think of it it's as revolutionary as creating websites in the early 1990s. So what websites were to the early World Wide Web, tokens are to the Web3, I think. Mm-hmm. And I think it will take a decade or 5 years at least. And we've been well into the early years of Bitcoin, and other blockchain tokens have focused on what many refer to as cryptocurrencies, tokens that represent some kind of virtual currency. And now we can see that we can tokenize real assets, whether it's a chair, a barrel of oil, money, or even central banks. Over 80% of central banks are looking into tokenizing their central bank currency, which we refer to as CBDC. So a kind of new monetary form that represents something we already know today. But I think that we will have new dynamics if we can tokenize art, for example, or real estate, and we can fractionalize this. This will create completely new dynamics in markets of assets of the real economy that haven't been as liquid before.
Klaus, I mean, if one thinks this through, what Bernard and Shermin said, a new world opens, actually. Is this new world regulated already? How do you cope with that on the legal side? Can you give us some advice, and how do you see tokenization from your legal perspective? Do we have regulatory frameworks for these assets already?
Yeah. Maybe I'd like to start with a few thoughts on how I view the blockchain technology and tokenization as a process therein, which is that I think we must understand that this is only the underlying technology of, for example, a financing process or some sort of process. It is, in my opinion, best considered being a database that is very efficient and much more efficient than centralized databases as we know, because it's cheap in operating, mostly because we have the opportunity to eliminate a trusted third party in this process, and second, because it provides a high level of security at the same time. So these are, in my opinion, two features of that technology that make the biggest difference. And in this database, we are able to store information, obviously. We are able to attribute this information to individuals who have access to some sort of address, account, or whatever you may call it. And now to this information, we are able to attribute something. We are able to attribute, we are able to let this token, as we call it, represent something in the real world. That might be an asset. That might be, as you mentioned before, a car in the e-loop business model. That might be a share in a company. That might be some other type of information. That might be personal information. That might be information on the provenance of a good, of the origin of a good. So now, from the legal point of view, most laws, to date at least, are designed in a technology neutral way. And this means eventually that it's less the technology, the blockchain technology or any other technology that decides on the applicability of the different types of laws or the different laws and acts on a financing process. It's rather the financial instrument we choose, and at the same time, it's the asset we are tokenizing. So we have different types of laws being applicable to security tokenization, to real estate tokenization, to the tokenization of a car. So the answer to your question essentially is yes, of course. Actually, every process of tokenization is more or less regulated. And this is particularly important in the financing sector. It doesn't matter from a capital markets point of view whether you issue security tokens or the way you issue regular shares to the public. Either way, for example, in this case, the prospectus regulation will be applicable, and you have to follow these regulations. And maybe one final point here. Also, since, as Bernhard mentioned before, it's very important that blockchain technology is some sort of proof of ownership of this, of control or whatever. So it's supposed to prove something after all. It's supposed to prove that the token is under control or in ownership of one individual. And here, another legal issue is whether the transfer of that token from one person to another is then, from the legal point of view, being considered as an effective transfer of their rights that are associated with the asset that is supposed to be transferred. So, for example, is the transfer of the token on the blockchain, does this at the same time lead to the transfer of the share that you have in a car or that you have in the company? And yeah, so I believe that eventually the law is still, we are looking at a heavy regulated sector. It's not designed yet for the blockchain economy, but we'll talk about this a little later, I believe. And I believe that blockchain will be a very substantial and important driver for the respective laws in the respective fields in the near future.
Do we have already court decisions on the topic, or are these still, so to say, in the field of interpretation of lawyers? Do we have already tangible, so to say, court decisions on that?
So in the regulatory field, as it regards security tokens, I believe there's no court decision yet, at least not in Austria. I'm not aware of other European countries, to be honest. I believe I've read about one case where it was discussed to what extent I think cryptocurrencies or other tokenized assets are handled in, I don't remember the context, to be honest. Mm-hmm. So very few settled cases, certainly almost nothing in settled case law at this point.
Okay. Valerie, you're doing one very concrete use case. You're tokenizing old timers, so to say. How did you come up with this idea? Why tokenization in your business?
Yeah, so actually we are based in the crypto valley, so in Zug and in Liechtenstein. And we are lucky enough to already have a blockchain act also for security token.
Okay.
So maybe I can elaborate a little bit on the concept further. So on our platform, we do an STO for a collectible car or other collectibles. And then we conduct a crowdfunding for 3 months. And once this is successfully done, we issue security token and distribute them. Doing this, we can open up new asset classes. We do it with collectibles. And why are we doing this is because I'm giving you a little bit of reference. A high net worth individual already allocates approximately 10% of their wealth in collectibles. That's twice as much as in private equity. And these investments are unbanked and not very liquid as well. By using tokenization, we do use a new technology, but as Klaus mentioned before, it's usually the laws are technology neutral. So we do use the same laws as for a traditional financial product. So all our offerings come with a prospectus and an ISIN, making them bankable and also tradable on regulated exchanges. We issue in Liechtenstein, so we can trade them in 29 countries to retail investors in Europe and almost globally to accredited investors.
I mean,
and by using,
yeah, sorry, continue.
Yes, and by using like blockchain, it becomes very scalable and very cost efficient. Klaus mentioned that before as well. So we can lower the minimum investment to $100. So this makes them available to retail investors as well.
How acceptable is buying tokens for your target group, which I would assume is rather traditional? Are they scared of the technology? Are they scared of scams? What is, so to say, the atmosphere on the market when you approach them with your product?
Well, I mean, I have to admit, so our previous target group, it shifted a lot with our new products. But I think since we are working together with the FMA, our prospectus is approved by financial regulators in Liechtenstein. You know, this is like people do gain trust when they see you're working closely with the regulators, and you know, it's like, yeah, I think if you reach certain milestones, you can reach new people and they get less scared from new investment opportunities.
You said something very important, that your regulation is not depending on a certain technology, but nevertheless, in your opening statement, on your first statement, you said that you have a special, let's say, crypto regulation in Crypto Valley. Did I get that correctly?
So I think it was important. It was more about understanding blockchain, right? So now that there's an understanding, they could, you know, release a blockchain act. But I think it was, I mean, it's not different from the other. Like we use, it's basically the same financial framework that we use as for traditional financial products. It's just that we use a different technology, and as as it was mentioned earlier as well, like the transfer of the shares. But it's very, very similar to the traditional laws.
You're tokenizing collectible cars currently, as you mentioned. Are you thinking about other assets since you, so to say, have your proof of concept and very good business in tokenizing some real life assets?
Yes. So since we're taking care of the whole life cycle of such an asset, so from sourcing, maintenance, insurance, etc., the setup is very crucial as well. And we have global partners and a great network in the collectible car scene. However, for other collectible assets, we are still establishing this. So we definitely want to move forward into other assets as well, but this is still in the pipeline.
Shermin, you have a strong overview of many projects. Some of them I know you're not allowed to speak about, but those that you can mention, what kind of use cases do you see? You mentioned real estate. Any other use cases where assets are being tokenized?
There are many use cases. I really like Valerie's example of tokenizing a specific type of real collectible. We also have crypto collectibles, like a few years ago, CryptoKitties. We have anyone who's issuing collectibles. The National Baseball Association in the United States have started to tokenize their baseball cards. So, and it's very similar to, in the end, what also Valerie is doing. And I think a very important point that she mentioned that I would like to stress is this new dynamics that we create, because all of a sudden, and the crucial point in my opinion is non-bankable assets all of a sudden can become bankable in the Web3 world, and then these worlds like the real economy and the finance world will merge. So as to get back to your question, the real estate industry, art industry, I think small and medium-sized companies nowadays, that would also be an example. Very often only big corporations can IPO. Because the transaction costs are very high. But in the future, once we have more adoption of this new technology and understanding of this new technology and explicit regulation in the different fields, I think that we can make SME shares bankable assets by tokenizing them. So this will create completely new dynamics for small companies, and that won't need the traditional VC startup funding, but can have families and friends at very low transaction costs, and professional investors at low transaction costs invest in a mom and pop shop. Because the apps will be there and the technology will be regulatory compliant, and you will be able to app-based invest into an SME company, which you can't do today because the settling of this for many countries like Austria, where SMEs are important, I think this is a very important use case.
Yeah, and we're talking about financing of SMEs and startups, so I'll be coming back to that point. Christoph, I would like to, so to say, pass over to you this question. How do you, as a venture fund, see these upcoming financing tools in the field of tokenization? Is there a new competitor coming, or are you also open for so to say, make use of these new tools?
There are certainly many advantages attached to tokenization, and yes, to some extent we consider it to be competition or complementary to us as a fund. I think those advantages most clearly apply to those asset classes that are usually considered to be illiquid. And of course, you can name art, real estate, cars, but at the end of the day, and that's what we are dealing with, shares in non-listed companies. And that's why it's really relevant to us. And, at the end of the day, it enables fractional ownership, as mentioned, which in turn makes it more accessible for new investor groups. So you create a secondary market, you create liquidity, and that's what it's really about. Liquidity, being able to much faster and at a cheaper price transfer your assets. And so I consider it clearly to be advantages, but there are still some obstacles that need to be overcome as well, on the other hand, and those are clearly in the field of regulatory alignment.
Klaus, may I pass this comment to you? How is the regulatory framework when we are talking about tokenizing the shares, the equity of a company?
We have to look at at the European legislation, regulatory legislation, and also at the local regulatory legislation or local legislation. This is in this context mostly corporate law. And on the other hand, we have to I think, think about two processes. That is, once the issuance of tokens, that is, tokenized shares or tokenized financing instruments, and on the other hand, trading on a secondary market of these tokenized shares. And so for the question of issuing issuing tokens, we now, as I mentioned before, when we talk about security tokens, we have to look at the European Prospectus regulation. We have to follow the restrictions therein. We also can look in this respect, and this is mostly important for startups, obviously. We can look at the Austrian Alternative Financing Act that allows issuing of financing instruments, tokenized or not, without the prospectus if that is below 2 million euros, and if it's between 2 and 5 million euros, you only need a simplified prospectus. And when you look at the Austrian corporate law and whether this allows tokenizing shares in companies, that is quite tricky, so to say. So we have seen already tokenized shares in a corporation, in an Aktiengesellschaft, that was Conda a few years ago. So that apparently works. And this is actually the biggest obstacle here for SMEs and startups. You can't really tokenize shares in a limited liability company in Austria, that is a GmbH, Gesellschaft mit beschränkter Haftung, because for almost any virtually any transfer of shares, you will need to involve a notary, and that makes this entire process very costly and painful, and really does not really allow to use the benefits of blockchain technology in this respect. And that's actually one of two big obstacles, in my opinion. Other, like general partnerships, offene Gesellschaft, and limited partnerships, Kommanditgesellschaft, so shares there in these companies, as well as any type of mezzanine financial instruments, can already be tokenized. So that works, and there's no real big obstacles in this field. So that's for issuing. And then the second, and I personally believe more interesting and more important part, is trading of tokens. And here we look at a very severe problem in European legislation that currently prevents us from public offerings and trading, actually trading of tokenized securities, and that is that we cannot, and the current markets in financial instruments directive does not allow the trading of tokenized securities on exchanges and multilateral trading facilities currently. So this is also the reason why you don't see in Europe, everywhere in Europe, you don't see any security exchange that allows you to trade tokenized securities. I hope this is going to change. I expect this to change in the mid-future, so to say, but currently we're stuck, so to say.
Germany is working, as far as I know. Shermin, do you have any so to say updates or current status quo on that? Germany, I think, is working, Börse Stuttgart, another one on projects towards this enabling exchange on the stock exchange.
Yeah, I'm aware of that, but this unfortunately, this doesn't help from a European perspective. In Europe, you want to be able to trade the tokenized securities in the entire union, because this makes it cheaper, cost effective. This makes it worth it, really, the effort. And that's still not possible, regardless of these kinds of projects of single exchanges or of countries like Germany. While still, I think we have to understand that these are certainly laws and which also on the European level will foster a development in the direction of allowing trading of security tokens on public secondary markets.
So I think one of the greatest challenges, I'm not a lawyer, but I fully agree with all the things you said on the kind of legal engineering aspect. You know, there are things we can technically do, but then if it's not regulatory compliant, it's not a use case, what companies can do. And where I think that Austria is maybe more progressive than Germany, they're regulating less specifically, and they're enabling companies to maybe have sandboxes or talk to the regulator, because in many aspects, and you just pointed out a few examples, it will be necessary to change the regulation if notary, the notarielle Akt, for example, the transfer of SME shares would become blockchainified legally, the use case becomes feasible. But until this is not happening, and the blockchain networks are notary networks in the end, but we need the legislation to accept that. Once we are there, whether it's in Austria or in another country, we will see an explosion of tokenized use cases that might not be possible because of regulation. And you also mentioned something regarding Austrian regulation versus, for example, German or European regulation. I think one of the challenges that we have, the Web3, is the next generation kind of globalization, and it allows us to do socioeconomic interactions globally with computationally trusted, right? But if we don't have global legislation for that, the challenge for startups or solution providers, tokenized solution providers, will be that they need to be regulatory compliant in each single jurisdiction, right? So this is not something new, but this will be even more, I think, frustrating in the Web3 than it was already in the internet, right? And I think lawyers and regulators will, and at the same time, we're seeing that many regulators are afraid to over-regulate explicitly because they don't want to kill innovation. At the same time, this is creating a lot of uncertainties for the startups or the innovation providers, let's say.
Shermin, do you see any examples and use cases on the market already of tokenized equity in startups or SMEs? Are there already some of the cases there?
I think for the some examples were mentioned, but this is really more a legal engineering question. So a lawyer, I wouldn't know of any because of the really tangible ones, because of the problems that were just mentioned.
There's little equity tokenization at this point. It's mostly debt.
Yep.
Rudolf, from your perspective, I mean, you talk as AVCO a lot about activating private capital to invest it in the real economy, in the big ones, in the small ones. Is tokenization actually your, so to say, friend in this term, to activate private capital to be able to invest in the assets that were not investable so far for the big audience?
Yeah, I mean, as I said in the beginning, I think there is a complementary nature, and Christoph mentioned it as well, where venture capital cannot reach markets, or do not want to go anyway, because it's too small. That is one of the issues often, that when we deal with SMEs, the market, the private equity market, starts maybe at 10 million euros equity ticket. We're not talking about startups now, we're talking about SMEs. So there's a whole market down there at that level, which is currently captured by crowdfunding maybe, but even that is a small market still. So yeah, so as Shermin said, I mean, I think that the tokenization could help SMEs to issue tokens to finance themselves. I mean, absolutely. But we can only talk about a market when all those regulatory issues are handled. And when we have a properly functioning secondary market, which is also still an issue, And then there are also issues like KYC at the beginning of the process. That also is being dealt with, but is not yet clear. So we are talking about at the moment about aspects of a functioning market, but not a functioning market as such. It will come, and I think it will have a very important role. But it's a slow, in terms of, the technology is way ahead of the reality of regulations and actually adopters. But it is a factor that will have to reckon with in a positive sense.
Bernhard, you are a serial founder in the field of blockchain. You are also a member of the AAA. What is your take on that? Do you see from your colleagues as well and your peers the same issues that are being raised? Or do you startups and startuppers found your ways around this?
Well, both, yes. There have been a couple of valid points being raised here. And the number one point that basically I think Valerie talked about, Sherman talked about, and pretty much has been talked about in all of the statements, is liquidity. And a lot of those projects regarding tokenization can provide markets that have been very illiquid so far with a lot of liquidity. And a very important point in that regard is what you have also mentioned, that there are so far no real secondary markets that allow for proper trading of such assets. And that is basically one of the points that we need to work on from a regulatory perspective. Because so far, Klaus has mentioned that before, what we could do is try to work basically our secondary markets for tokenized assets into the currently existing MTF framework. That there is a reason that nobody has done that. And that reason is that basically the way that assets are defined and seen in that framework do not really apply to what projects are currently doing when it comes to tokenization. And so looking at what the EU Commission is currently doing, and over the past couple of days, there have been a couple of leaks or publications or non-papers that we have seen. The EU Commission is working on that. And until there is at least a proper statement of them on how this should work, or even proper regulations on how this should work, the liquidity that tokenization provides will not be there in the amount that I think, or I believe we need for the markets to work properly as we are used to in traditional markets. Mm-hmm. And in regards to basically startups working around that, yes, it's happening all the time. Looking at just the Austrian market, we don't even need to look far for that. Just looking at the Austrian market, there have been a lot of projects actually working with tokenization and working around the limitations that we are currently having, using, for example, the ALTFG, the Alternative Financing Act, or even working in frameworks that basically they try to build themselves. Conda has been mentioned, or I would also like to mention Blockpit, and a couple of others. And so, there will be ways around it, and there are already ways around it. But in order to be seen as a serious market and a serious movement, there needs to be some kind of statement or framework from basically a higher place, which would, in the best case, be the European Commission.
Okay, Christoph, one maybe interesting point from your investor perspective. I remember back in the 2017 and ever since, so to say, many venture capital companies were saying we invest in companies in the equity the way we're used to. We don't buy tokens. Did that change from your perspective? Do you still just keep investing in the traditional equity, or would you also invest in a tokenized assets as a venture fund?
I have to admit, we still would not invest. Interested in companies that do things like that, and we are also invested in some of them. But still, we are then an equity investor and not invested into the tokens.
We just reported, I think, 2 or 3 weeks ago, maybe a month ago, about your investment in Morpher. Why did you decide to invest in this startup?
Yeah, Morpher is a great example, and I think I need to briefly introduce you to their business model and what they do. Basically, it's a trading platform. They issue a token, and when you buy this token as an owner, you can gain exposure to synthetically exposure to any kind of measurable asset. such as stocks, such as bonds, such as real estate, such as anything you can measure, where there is a price. And why did we invest? Because we think that's a paradigm shift. If usually think about it, if you want to trade a stock, even you're a buyer or a seller, you need to find a trading counterparty. That's someone who's even if the holder of the stock is willing to buy the stock at the same time, at the same price, etc., etc. So that's kind of difficult to find someone like that. There are markets which are more liquid and there are others which are less liquid. And the longer it takes to find your trading counterparty, the less liquid the market is considered to be. But if there's not a human counterpart or institutional investor whatsoever, but if there is a smart contract which is your counterpart, which enables a 24/7 liquidity, this is really a paradigm shift to any kind of capital market and any other market. And that's why we invested with Morpho.
And what would be necessary for you guys to start investing in tokens? Do you have, so to say, regulatory concerns? Why do you don't invest there?
I think it would need to be backed by our investors in turn. You know, as long as our limited partners, our investors do not feel comfortable with anything around tokens, it doesn't help if we are ready to invest. I think we need, so the conviction has to be on a much broader base. So not only us as the investor acting in the interest of our investors, but we need to consider our investors as well, and it's on a much broader basis and will take much more time. And then again, we need a regulatory environment that fosters that conviction, and that's I think why it will take longer than expected. For example, for funds, there might be dedicated funds for dedicated investors, but you know, it's not going to be tomorrow that all VC funds will invest in tokenized businesses. That's my opinion.
But Christoph, do you think that we'll see venture capital funds that are actually financed through tokens, that have done their fundraising via tokens?
Yes, but again, then you need an LP that is familiar with tokens and is willing to go via tokens. There are certainly many out there, and it's a growing number for sure. But still, if you take the entire universe of VC investors, or not us as the institutional investor, but those backing us, those investing into the VC funds, I think if you talk to those family offices and institutional investors which are not permitted yet to invest in tokens, family office that are not ready yet for whatever reason to invest in tokens, this will take time and a lot of explanation and education, but sooner or later it will happen. I would agree, but I think it will be not in 2021, but rather in 3 years from now or something like that.
Okay, we have some questions and there's some discussion going on in our hop-in tool, so I will take one question for whoever wants to take it. Richard is asking us, who will ensure quality control of the underlying tokenized assets? We currently see heaps of rather uneducated retail investors swarming onto the market, using fintechs as their getaway to an exciting, but in reality very complex investment landscape. Could the same happen with tokens? Shermin.
Let me unmute. Yes, unfortunately, we are seeing this, and the big word is DeFi, right? Decentralized finance. DeFi is the buzzword, has been a buzzword for over a year now, and we're seeing a kind of high-frequency trading with crypto assets on steroids via flash trades, flash trade basically is a single complex convoluted trade where I can leverage money or assets I don't have and create financial derivatives within one blockchain transaction. And because the space, I think it was mentioned before, there is no such thing as not regulated, but if things are not explicitly regulated, there is this gap of catch a thief kind of, where people who have the mathematical knowledge of how financial derivatives work and understand crypto well enough and the attack vectors in the crypto space, for example, exchanges, a lot of these flash attacks that have been happening are one of the reasons is that the decentralized exchanges don't have enough market depth. So by creating a specific, you can attack a specific market and make a big profit from low market depth by manipulating the market within one blockchain transaction. So yes, it is a challenge to retail investors who have little knowledge. And this is why regulation is important, but regulation has to happen on a global level. And if we continue this localized game of national regulation, which I fear will happen, there will be a lot of market manipulation outside of national regulation.
Okay.
So, yeah.
I absolutely agree with Sherman here, and I think the point you raised regarding global regulation is a very important one. So I personally would be happy if you managed to have some kind of EU-wide regulation. That would be progress on that level at least. I think what also needs to happen is kind of a shift in perception, because so far, usually when the community, the crypto community talks about regulation, it's very often in a negative way, whereas regulation would make us more slow and regulation would stop progress in that regard. But in the end, what regulation is, or at least what it is supposed to be, is protection of consumers. Regulation is not there to make more work or to create more work for companies. Regulation is there to protect consumers.
Ideally.
And I think the current DeFi wave is showing very much showing that this is very much needed, because there are a lot of investors who don't have the experience to work with such tools without being provided the information that is required to work with those tools.
But I mean,
and we're seeing dynamics, just one sentence, we're seeing dynamics that are very similar to what was happening in the early 20th century until in the 20s and 30s, where these markets, the stock markets, were not regulated, and DeFi now, Web3 tokenized, Web3 based financial trading, unfortunately showing the same dynamics.
Of bubbles.
Dynamics of bubbles, Rudolf is mentioning. What kind of dynamics are you referring to, Shermin, for those who don't know?
Well, the dynamics, yes, of bubbles for sure, but bubbles is more whenever you have a new technology, there is the tendency for people to kind of religiously believe that the technology will miraculously solve everything. And then there is a lot of wishful thinking, but more here the information asymmetries of people who don't understand the dynamics of a certain market. The people who don't understand DeFi and the people who do understand DeFi in a void where the regulators haven't caught up, trying to kind of explicitly regulate this, monitor this, etc., etc.
Okay.
So, but at the same time, DeFi, we shouldn't DeFi also gives us the possibility, once regulation is in place for many use cases, like, for example, tokenizing SME shares, real estate, etc., we will have new dynamics beyond trading. So very often I fear that our discussion when it comes to tokenization is about better trading, higher liquidity, lower costs, issuing costs. That is all true. But I think there will be completely new participatory dynamics and value creation beyond traditional trading. And but I'm assuming that once we pass the stage of tokenizing assets and DeFi, we will go into the other really interesting things. Yeah.
Okay, very good point. Klaus, just one question on the regulation, because it seems to me to be almost an illusion to think that we'll have a global regulation when it's difficult to have a national one, and not to speak about European one. there is no global regulatory body. So how can we imagine the regulatory frameworks in the future for any businesses that deal with this topic?
Yeah, I agree that there will be no global regulatory framework in the near or mid future. There's no plans in this respect anyway. But what I can say is at this point there is a proposal out there for a regulation on marketing crypto assets. That will be very interesting because it will be a very heavy regulation on service providers in this field, and it will also regulate 3 types of tokens. That is, utility tokens with a very low level of regulation. Then there's so-called asset reference tokens, which refer to either other crypto assets or commodities or a basket of fiat currencies. They are, so to say, regulated on a mid-level, but they will be regulated substantially too. And finally, there we will see e-money tokens, which will be put essentially under the regime of e-money that is being issued by e-money institutions. But what will not be happening is with this regulation, a regulation of security tokens, and it will also not be applicable to security tokens. That is, tokens which represent a share in a company and a publicly tradable or other equity or debt shares in that respect. We have to consider, though, that I believe we have to consider that utility tokens to some extent also are quite and have been in the past a very useful option for financing startups. Less SMEs, but some SMEs too. And a final notion to this, to the question, what should change to make tokenized finance useful for SMEs too, is I think there must be, at least in Austria, we must see a change in culture in this respect, because Austrian SMEs traditionally do not get investment from the public. This is, for example, different in Sweden, I believe, where it's not unusual to do sort of a crowdfunding as an SME. That's quite unusual here in Austria. They don't want. In Austria, we have banks for this purpose.
Mm-hmm. So it's a cultural thing as well. Valerie, do you maybe have any best practice examples in terms of how regulatory frameworks can boost financing of SMEs, for example, from Switzerland, from, so to say, your crypto valley?
So actually in Switzerland, we already have service providers like Daura, for instance, in Zug. It offers the issuance of Swiss shares for SMEs and also capital raises. So it's actually quite common already. And I think that's also because it's very user-friendly and people don't even realize that they're using blockchain. But again, it's limited to Switzerland. Also, the shares are being traded in a community or the fundraising as well. So it's more like a private. But I did check the fees today and it's ridiculously affordable. So Sherman mentioned it before. I think this is also going to be a big driver for SMEs that will be pushing for such small private IPOs because they cannot afford an IPO. They will be pushing for tokenized.
Do you have any data on that? How much money? What's the volume of the money behind it being invested so far in the SMEs via this vehicle?
Oh no, unfortunately, I don't have any data. But it would be interesting. Would be interesting. But I know it's already it's quite a few companies that raised funds through tokenization. But again, it was in.
I couldn't invest from Austria. I couldn't buy shares in a Switzerland company, so it's only within Switzerland.
I think if you are a member of the organization and you would have to be an accredited investor to become a member of the organization, it would be possible.
But Rudolf, I mean, this will be the game changer. I mean, you've been talking for years and years and years about activating private capital for investments in startups, in funds, in crowdfunding and so on and so forth. With this possibility, we could activate enormous amount of money that would never be able to be invested in companies.
Yeah, I mean, as I said before, I think on the lower end of the market, I definitely see this as a very positive potential development. I think, nevertheless, we were talking about is tokenization or financing by tokens for startups and SMEs really also competitive or in competition with venture capital. And of course it is. And I think venture capital has one particular aspect that is in its favor. And that is that it is not just providing capital, but also advice. It's also the company building aspect that venture capital funds and private equity funds are majoring in. That's where they create the value for the investors. Whereas if you just finance a company, put some money up in whatever form, and don't ever talk to the management, don't ever be in contact with them even, then the value development aspect is completely lost. You leave them to their own devices, and you close your eyes and hope that in a few years they're a better company. Whereas in venture capital funds and private equity funds, we take the fiduciary duty of the fund manager is to improve the company, to make the company more profitable, grow faster, put in their corporate governance and their controlling and all the good functional devices. So after 4 or 5 years, it is a better company, can be sold at a higher price. That's the value proposition of venture capital and private equity, which is not, and I'd be interested to hear other views on that, but that is not on offer through tokenization.
But is there another aspect of it, the marketing aspect of it? Because if you have a lot of smaller investors, they would all be in favor of your company. They could share it on social media. They could be your, so to say...
I'm sure there will be things like that will develop, I'm sure.
Bernhard, did you feel any...
Investment clubs, etc. Yeah.
Bernhard, you did an STO already with one of your startups. Did you feel that, let's say, support of the crowd who invested on your company, in your company, being a multiplier, spreading the word about the company outside?
First thing, we really have to differ here. What I did back then was an ICO, which is basically, kind of a token issuance or a coin issuance without an underlying asset. So that there's quite a big difference on the regulatory side. Regarding the community, absolutely. But so it's kind of a two-sided blade. On the one hand, of course, the community really supports the project that they're behind. On the other hand, there are a lot of topics that a company has to handle that you cannot really explain easily to a community, especially from the regulatory side. And that is the point I tried to make before. Very often, the community doesn't really understand what a company has to do in order to be regulatory compliant. And that is also something that you have to keep in mind when investing into a company in an STO or things like that. That basically there is a complex framework that this company is moving in. But on the other hand, as I said before, having a community in your back that spreads the word, that basically drives the product, that gives you live feedback, that, as I have done many times before, is able to provide feedback on products that you wouldn't be able to give to any kind of end user or end consumer, is very valuable indeed. And that is definitely something that you have to take into account when valuing such options.
Perfect. So we're running out of time. Maybe the final round. What will the future look like in your view? Some estimates already there. Christoph said maybe in 2023, next 3-4 years. What are your estimates? Also, what are your takeaways of this discussion? What needs to be done to really boost this tokenization of shares, the financing of SMEs and startups via tokenization? Whoever wants to start. Maybe Shermin.
Can you make it a bit more precise, the question? Sorry.
Yeah, what do you think the future will look like? When can we expect the financing of SMEs and startups via tokenization to really pick up, to really take place? Are we talking about 2025? Are we talking about next quarter, so to say, the first quarter of 21st? What is your estimate on that?
That's really hard to say. It depends on the regulator, right? And I think there will be an avalanche effect as soon as one country has significant regulation to make it very attractive for startups to go there, there might be an avalanche effect to other countries. When it comes to the specific use case to tokenizing SME shares, this is a complex regulatory question. There is the lobbying industry, the notaries. They are very built into the regulatory infrastructure. That's really hard to say.
Okay.
But I think that over the next 5 years, we will see regulators acting faster than we think. And usually it's black swan events which induce regulators to move. For example, if we remember Facebook announcing Libra over a year ago, until that moment, most central banks were saying, cryptocurrencies, this is bogus, we don't want that. Except for the IMF, they were quite visionary, and some central banks were looking into that. But once Libra, a consortium around Facebook, which has over 2 billion users, announced that they want to issue a stable token that you can use in-app for any person who has Facebook Messenger could potentially pay with that stable token, and they never developed it. They only issued an announcement, a white paper. And we see now an early study earlier this year, the central bank, Bank for International Settlement, came up with a report that this year already over 80% of central banks have looked into tokenizing their central bank currencies. So, and the dynamics were very different before Libra made this announcement. So I think this will be happening. Black swan events creating avalanche reactions of other regulators.
Perfect. Before we close, Klaus, I will ask you for your final thoughts on one topic that interests me personally as well, and then to have your regulatory estimation. We still have one comment that maybe we can just comment very briefly. Astrid Woolard is saying that dedicated funds like hers, Untitled Ventures, are focusing full-time on investing in the blockchain space. Okay, this still doesn't answer whether they invest in tokens or in companies. It's bleeding-edge technology and needs deep understanding of the different logics to not tap into the trap of pouring money into speculation-only tokens. It's not trivial to distinguish between hype and high-quality projects if you're not fully immersed into the ecosystem and apply a principled methodology. Then Christian was answering, taking this argument, Astrid, seen from a macro perspective, leads us to another piece which is needed: standardization and seal of quality. Maybe, Christoph, from your perspective, how do you see these points being taken here in this discussion from the VC perspective? Is the VC fund actually the way to go to, let's say, protect the small private investors who could make mistakes with single investments, and rather to invest in the funds that would be then investing into the tokens and businesses that deal with tokens?
I'd love to say we are the only way to do it, but obviously it's not. And it depends, there are some investors who prefer to invest to make their own decisions, and then there are others which want to outsource their decisions to a dedicated manager. So I think, but I can only agree, yes, there are some business models out there which are pure speculation. There are no real underlying assets of any value, and you have to really look out and be very cautious what you're investing in. So that's true.
Okay. There is some other discussion going on, but we can't take all of the questions as we're out of time. So Klaus, maybe your close remarks on the future. Where do you see the regulatory future? You mentioned the leaked regulation from the Commission side as well. Are you more optimistic in terms of when this could be a regulated reality?
I mean, it's public. It's published already. So, I mean, I personally think that we also need, particularly in this field that has a very special past, so to say, we need people to gain trust in that technology. And trust is at least promoted to some extent by extensive regulation. And I think this is what we will see in the next years. I would say like maybe 3 to 5 to 7 years. It will take that time that people really gain trust. I mean, we're talking about retail investors here who are used to put their money invest in assets or in asset classes that they trust in, or that somebody tells them to trust in. Yeah, and this is not yet. We're not yet there when it comes to tokenized investment opportunities. So I think it will take a little while until this really really becomes good retail investors, technology for retail investors products.
Great. Thank you all for taking your time for very interesting insights and for this discussion. Rudolf, thank you very much for putting this very, very distinguished panel together. Is tokenization going to be one of the topics at your annual conference of AVCO?
We are definitely going to touch on it in the venture capital stream in the afternoon. It'll be a topic. But we have many topics. We are a sort of broad church of topics, venture capital, private equity, but also we have two very distinguished panels on the issue of limited partners becoming more active in the marketplace. So yeah, we'll have many different and a great variety of discussions.
You will start with one stream, which will be available for everybody, and then in the afternoon you will have three very interesting
breakout sessions, and we charge a small fee for that, 150 euros for the breakout sessions.
Perfect. And tickets are still available at AVCO.
Yeah, we go into our website and the links are there.
And www.avco.com or
.at.
Join the conference. I think I saw the program and agenda. Chapeau. Very, very distinguished speakers there. Super interesting topics. And thank you all for being with us tonight. We'll keep discussing about tokenizing assets. I'll be coming back to you as speakers as well as broadcasting to touch upon the future topics that we are doing, so to say, on the bilateral level as well. All the best. Thank you for your time and thank you for being with us tonight.
Also, a great thank you from us for a great discussion. It was a very concentrated, but also in depth. It's a complex matter, but I think we covered a lot of bases, and we'll have to continue to discuss it. I'm sure in the future. It's an ongoing process.
Perfect. Thank you so much, and see you tomorrow.